Hello and welcome to another Learn to Trade webinar. And today we'll be looking at which stocks to invest in for 2021, the first in a series of videos. We begin by looking at the airline sector, and we're narrowing it down to one stock we think should be in your portfolio. But before we get to that, we'll be looking at a number of other companies in the sector in Europe and then China. So starting in Europe, as you can see, we've highlighted Ryanair Holdings, which is one of the leading low-cost airline companies operating in Europe on the short-haul end of the sector. And it has an outperform rating from brokers, and according to SharePad, broker consensus is a price of 15.67, which is 4.2% below the current price, €16.89, which suggests that the market has already priced in at least part of the recovery story. So companies such as Ryanair and a similar company called Wizz Air, which operates in Eastern Europe but has a similar business model, low cost, pile them in, that's the customers, charge them for little extras and so forth, quite tight margins, fast turnarounds on the getting to the airports and getting back out to the next airport, and that's how they make their money. And Wizz Air operates in a similar fashion. Here we are, Wizz Air, and currently priced at £53, which is 12% above the target price, again from our brokers. That's according to SharePad. And we can expect companies such as Ryanair and Wizz Air to be the first to begin to feel the benefit of coming out of lockdown and the rollout of the vaccines. That is in stark contrast to the likes of, for example, IAG, which owns Iberia and British Airways, which are far more dependent on the long-haul international flights across the Atlantic and elsewhere in the world. And the story there will be a little bit more medium to long term in terms of those flights getting back off the ground, but there are promising signs there also. Okay, now I'm going to show you a chart from Bloomberg which shows you the contrast in the market's view between the likes of Lufthansa and other national carriers such as International Consolidated Airlines, which includes, let's say, British Airways, and also it doesn't include Air France and KLM Group, another one of the national carriers. And you can see those grouped at the bottom of our chart, and soaring above is Ryanair and Wizz Air Holdings. So if you were of a mind to purchase an airline in Europe, go for Ryanair or Wizz Air Holdings. But bear in mind that both of those are currently beating the broker estimates, and that does suggest to us that it's somewhat priced in the good news story on the vaccine front. So, where else could we look for a good investment in airlines to play the recovery game and the reflation trade? Well, an excellent place, I think, to look is China. Why China? 3 airlines that dominate in China are Air China, China Southern, and China Eastern. Now, together, they've made losses last year of between 4 to 5 billion. That's dollars, US dollars, and that sounds like quite a lot, doesn't it? But let's compare that to IAG, we mentioned earlier, in Europe. They made a 2020 loss of 7.4 billion. That's one group alone, euros that is. And arguably, the Chinese airlines are in a slightly better or substantially better position than their European long-haul counterparts, and short-haul, I might add. So, if we look at the passenger counts, for example, they are down. That is true. So Southern is down 36%, Eastern is down 42%, Air China is down 40%. But unlike in Europe and in the US, in China, to make up for the loss of the international routes, they were still able to offset some of that, not in terms of the profits, but in terms of the passengers that they were carrying through the huge domestic market. But at the same time, it should be added, revenue per available seat kilometres was also way down. And the domestic market in China, as it is in Europe, but perhaps even more so, is operating on extremely tight margins, extremely tight. And the international routes are where the big 3 make their money. And the government has been and is being very conservative in its approach to restarting those journeys outside of China. And they've been operating a fly once policy, which means that 1 flight a week to 1 country for each airline. Now, no one's going to make any profits doing that. But there are signs, quite strong signs, that things are changing. And that's all to do with the rollout of the vaccine, but not just the rollout of the vaccine, but also the prospect of vaccine passports, which would be key for international travel. And that prospect means that the likes of Air China may be the first to benefit. One, because of their enviable home market position, even though it's not massively profitable, it has actually kept their planes in the air, and despite the cutback in travelling around Lunar New Year, the government demanded that they take 25 million seats out. Despite that, compared to mid-February 2020, airline seat capacity in China is up 169% at this moment in time. So they're coming from a much stronger base than some of their international counterparts. And why we like Air China, it's the biggest, but it's because of how it plays into the China consumer story and the rise of the middle class in China. And we think that international travel is a part of that story. In other words, the Chinese holidaymakers will be returning in force to Paris and other international destinations. And that story is highlighted more widely than just China, because Asia Airlines have been beating the broad market. So here we have, again from Bloomberg, a chart that shows how that's been happening. So it's around 13% outperformance compared to their international peers for Asia. Why is that? It's because Asia has done a hell of a lot better than anywhere else in the world at containing the virus and stopping its spread. So the only thing they're really waiting for, not quite the only thing, but is for the rest of the world to catch up. And there are signs that the rest of the world is catching up, especially the UK and the US actually, when it comes to the rollout of the vaccine. And they are key countries for restarting international flying. But of course, there's the rest of Europe, who will eventually, presumably, get their act together on the vaccines, because the European Union has been having some teething problems, let us say, in that regard. But nevertheless, we expect that to pick up too. So Air China is our pick, our first pick of stocks to hold for 2021. Thank you for watching today's webinar from Learn to Trade, and you'll see in the description below a link to trade Air China on eToro. Click through on the link and sign up for an account at eToro, and you can trade on the Hong Kong market, where Air China has one of its main listings, and you can buy the stock there. You can also use some leverage if you so wish to make the most of what we would expect to be gains in the year ahead.